Welcome to the Techno Fundamental Report for December the 18th. Romance and reality. You know, when we're investing and we're looking for that great company that will give us a lot of potential, there's a romantic phase before the company's even making money. Like, take, for example, Amazon. You know, Amazon went public in 1997, and they went years before they hit reality, which was they were making a lot of money. So the romance stage is something to be aware of, but once you get to reality, that's where things kind of sink in. So let's look at the reality of AI, artificial intelligence. AI spending is holding up the global economy. So if you look at how much non-residential construction is going on, all of it is data centers. If we did not have the spending of data centers, we would probably be in recession. So if this group of stocks fails to hold up from technical perspective, this could be a very serious situation. So here we have Oracle, which is considered a AI leader. You got a major gap up here. However, it immediately failed, has gone into a serious downtrend, and is making new lows. So we have to ask the question is, are we dealing with a bubble here? Well, listen, I have never seen a bear market or a bubble advertised. It's generally not advertised, but they do happen. And if we go back in time and we look at the various bubbles in history, one we could really focus on is 2000, the dot-com bust. That year, the market lost 50.5% of its value. So if you go back and look at all the bubbles through time, now if you take 1929, portfolios went down 89%. So you pretty much had $1 million at the beginning of the year or beginning of the period, and you ended up with $108,000 in 1939. There were 1,039 days to lose that money. So we need to be, very aware of this reality, because this is reality. Price is everything. So if the price goes down, we don't like it. If it goes up, we do like it. But all these bubbles have averaged over time an average loss of 53.48% over 944 calendar days. Now, I'm not arguing for a bear market, and I'm not arguing for a bubble, but I am going to tell you what I see. So if you go back in time, you can see over the long run, it's been a good deal, but you get a bubble and a bust, a bubble and a bust, a bubble and a bust, a bubble and a bust. They do happen. So we need to be very aware of that reality. So we can deal with romance all day long, but the price is all that matters. So let's go back in time. Now, this was a Fortune article that came out. It says there have been head fakes before, but this time may be different as the latest stock rotation out of AI is just getting started, analysts say. So when you look at the fact that AI is making up such a humongous portion of the global economy, you can't help but pay attention to what's going on. So here we have Cisco Systems, and this is going back and I'm looking at the dot-com bubble, which peaked in March of 2000. So let's just kind of notice the pattern here. You got a major high, then you made a lower high, you made a low, and then a lower low, a lower high, and then you got the death cross. Now the death cross is where the 25-day moving average crossed below the 50. And then you can see that it just continued to have major problems from there on. So let's just kind of look at and use it. We'll just use Cisco as a template. So remember here, the death cross to me was the major indicator that said that the trend had reversed to the downside. So here we have NVIDIA. Now, NVIDIA has been, pretty much the leader of this AI cycle. So you can see here we have the high, we've got the lower high, the low, and then the lower low. And today, actually, we got down to 171. So Livermore talks about the line of least resistance. So you can see here we're breaking down below that kind of critical area. So let's just continue to look at some others. Here's Oracle. You can see the high, the lower high, and you get the death cross, making a new low today. Now, this is just technical analysis. This is not some fundamental story. I'm just simply saying that there is a negative pattern here going on with these AI stocks, which have been the past leadership over the last 3 years, 4 years. And usually when the generals lead, the troops will follow. So just like the dot-com bust, it had a way of pulling everything down. So here's Microsoft. You can see the double top, the lower low, and then the death cross. So we're starting to see a lot of negative patterns here. Here's Meta, which is Facebook. You got the death cross, you got the lower highs, and then you got the low. So hopefully this all straightens out, but right now I would continue to be cautious. Here was a new IPO that came out during the year called CoreWeave, and you can see it was just a parabolic up move. These guys build data centers, and then they lease them. But anyway, you can see here a major parabolic move. Then we have the breakdown. We've got the death cross. We got the low. We got the failed rally. We've got another death cross. This one is somewhat telling me to stay very cautious here when it comes to AI data centers. Now let's look at some growth indicators that we've talked about in the past. This is where we're comparing the NASDAQ as a ratio to low volatility. You can see here top, lower top, and then breaking down today. Here we have another ratio, which is the NASDAQ compared to the consumer staples. Same basic negative pattern here. We're seeing some real weakness. Now this all could change tomorrow. But right now, we take this at a day at a time, and the growth stocks are not looking particularly interesting. Here we have ARK Innovation, which is a major growth fund. You can see the top here. We've come down. We made a low. We tried to rally. Now we're breaking down again. This is another fund called the IBD 50 Fund. This is Investors Business Daily. 50 growth stocks. Double top, major sell-off, somewhat of a failed rally, breaking down again. This is a particular fund called the Momentum Factor. You can see here really breaking down today. These are high momentum stocks, and this is an ETF that invests in those, and you can see the basic breakdown. So in conclusion, what I'm saying is that there's a period of time to deal with romance, and there's a time to deal with reality. And the reality of the situation right now is these tech stocks are breaking down. Can they pull the whole market down with them? Possibly. That's what's happened in the past. So stay cautious, keep some powder dry, and pay attention to what's going on. If you have any questions, please let me know. Thank you very much.